everyone, my name is Ming Yao, and this is another segment of Wealth Assembly. Let me just do a very quick introduction about myself so that you know who is the one speaking to you right here. Alright, my name is Ming Yao, one of the V trainer. This is a profile of myself, and I joined the company after my national service in Singapore. So I've actually achieved my degree from National University of Singapore, economics degree. Currently, I'm managing a 6-digit portfolio, generating 4 figures income from options every single month. So my profile is I'm actually training in V, right? And I'm also a product manager for V App, right? Our fintech solution to help people to invest smarter, faster, and easier. Very quick disclaimer before we even go into any of our analysis today, right? I'm going to mention some company names, right? I'm going to mention some of the gurus' name, but doesn't mean I'm actually giving you any buy or sell recommendation, all right? All of these only for your discussion and also for you to analyze further after this video. So let's get started. Before we even go into any analysis of companies, all right, how many of you still remember this incident, right? COVID-19, the coronavirus that spread from Wuhan, right, in China itself, mainland China. And we all know that from this incident, there are many things that you actually miss, right, a couple of years, right, 1 or 2 years. And some of the events like this, right, traveling with family and friends, or gatherings in large group, right, with so close proximity of social distancing, right? And what are these implications on the mental health and physical health? There might be a lot. Some of you actually miss own traveling, your own solo traveling. And with this, right, you actually have a lot of enjoyment, right? You actually enjoy going out for all these trips. But because of this incident, this pandemic that we all encounter in the global environment, all right, we actually cannot travel as often. In fact, no one can actually travel in that one or two years period of time. And we have transited to online meetings or online lessons, right? We have actually universities that conduct online lessons for exchange students from different areas of the world, right? And this has actually become the new norm that we are facing in today's world. This might be some of your family and friends interaction that you have, but for those who are working, for those who are in the workforce, what are the economic impact that you have, right? If you actually remember the incident, that year itself when the entire economy, right, not only in the Asia region, but also spread around Europe and North America region, right, actually jobs are lost, right? People are getting retrenched. And most of the countries, in fact, around the global region, everyone is experiencing a very tough time in terms of their livelihood. Because you might have friends or yourself lost a job, right? Or your parents come back to you and telling you that, hey, actually companies just went through some retrench and I'm one of the person that they have to let go, right? What has this got to do with you? What has this got to do with you? Like this economic impact. You learn that from this incident itself, you cannot rely only on your single source of income, which is active income, right? How do I define active income? Everyone, right? There is a human being, right? Adult. You actually have 24 hours, right? 24 hours to spend in one day itself. And many of you here, who I assume are working very very hard, right? It can't possibly that you are working 25 or 26 hours in one day, right? Because everyone's time is equal, right? That's how we are created and have a level playing ground. But if you only have one source of income, if one pandemic hit you just like COVID-19, what will happen to your source of income? What will happen to your family's livelihood? All right, and that is why we have to go into investing. All right, go into investing. Just quoting Warren Buffett over here, all right? He actually mentioned this a couple of years back. If you don't find a way to actually make money work for you while you sleep, you will actually work until you die. So this is a quote by him, all right, not by me. And I truly believe in the fundamental reason that, hey, you should make money work harder for you, even though you might be off your work time. So in essence, if you are working from 9 to 5, all right, you should be worrying what you are doing 5 to 9 to separate yourself from the rest. Or rather, all right, creating a second source of income that do not need you to work after your working hours. Some tools to consider, right? Some of you here by now should know what I'm talking about, right? There's different tools to consider other than active income, all right? I'm going to show you over here right now. Firstly, you have the exchange traded fund, right? S&P 500, STI 30, right? Hang Seng Index, right? You have many of these alternatives of ETF, where you have the basket of companies, you can invest in them. Technically, you are investing in the global economy, right? S&P 500, the 500 largest companies in the world. Some of you might argue that, hey, I put my money in the bonds, right? In bonds, where you put your money, right, you have actually fixed returns every single year, right? Guaranteed return. And at the end of the day, you are able to withdraw your principal money, principal capital. And some of you might be looking into fixed D, right? It's a short form for fixed deposit, where you aim to grow your cash on hand, right, by 1 to 2% every single year, right, annually. And some of you might be considering ILP, right, a short form for investment linked product. What is this about, right? You actually mix your investment and insurance together, where you actually pay a premium, all right? Some part of the premium will be used for investment, and then there's the rest that's covering your life insurance. So some of you might be considering this for, all right, more popular ones like trading, right? Buying and selling every single night when the market is open, right? Forex trading, right? Can be stocks trading, crypto trading, right? All of these, you are aiming to buy low and sell high, all right? And what is it costing you, all right? It's actually on your health. So what we do here at V is that we advocate value investing, or rather investing for the long term. All right, these are some tools that you can consider for your own reference other than just active income. Now, there are some myths about investing, right? Particularly when we are doing at V, right, we actually advocate investing. There are some myths that we actually encounter. First one, the most popular one, all right, investing is difficult or risky, all right, because when you see this chart, when you see a stock price actually declining during crisis period, right, everyone is selling, right? So why should you go into the market when it's so risky and you don't even understand them, right? Secondly, when you see faces like this, right, during the economic crisis, there'll be people losing jobs. There'll be people that leverage too much, and they went into bankruptcy, just like 2008 global financial crisis. All right, these pictures over here, they are live photos back in the stock market, right, in 2008. So when you see such a picture, everyone will stir an emotion called fear, right? And you would think that, hey, I shouldn't touch anything that's related to stocks. I shouldn't touch anything that's related to investment because it's difficult and it's risky. But let me just hold you up here a little bit, all right? I just want to bring some clarifications on this myth, all right, about these two terms. One is called investing. Secondly, it's called speculation or speculating. Are you mixing them up when you talk about investing? Is investing difficult or risky, or is speculating difficult or risky? So now you have to switch your mindset a bit. There are subtle differences for these two, but many people in the world, they actually mix them up together, right? They actually have a misconception about investing because it's, usually most often of the time is speculation. So let's talk a bit on speculating, all right? I actually attached a graph over here for you to have some consideration. We know about stocks. Everyone have one investing 101 quote is that I want to buy low, I want to sell high, right? That's what most people think. And what you realize that, hey, when you are speculating, you are price focused. What do you mean by price focused? Means that when you look at the stock chart, all you care about is when is the lowest point, when is the highest point, all right? And you aim to time at the lowest possible point to get your entry price, right? You invest a few $1,000s, few $100s to get at the lowest possible price. And then when the stock price run up bullish for the next 1 or 2 years, right, get to all-time high, and that's when you sell, right? You can realize that, hey, you are getting more price focus than business focus. And second thing is this, you have no idea what the business or the company underlying is doing, all right? For example, you look at Amazon, you look at Google, all right? You look at the share price, you will aim for the lowest thousands possible because they are in the thousands range, all right? And you aim for the highest 10,000s possible to actually release the stock price, or rather regain your capital and cash. But do you have any idea what Google or Amazon does? The answer is probably no, right? Because you never bother to ask yourself this question when you are speculating in the market. Next, all right, you're looking at these market news, or rather daily news, all right, that will distract you from what really the business is doing. Right? You look at news that, hey, Amazon is overworking their workers, or Google is not have a bad culture, all right? All of these things are daily market news that analysts or other reporters, medias like to paint pictures so that people like you who are often speculating, all right, they will look and consume at all of these news. But many of the time, right, they are not actually related to what the business is doing day to day operationally, all right? So these are 3 pointers that you'll find yourself, hey, as a checklist, are you speculating or investing? All right, let's go on to the next one. investing. All right, there's a purpose why I attached this picture over here. Because firstly, now you are value focused. What do I mean by value focused? The value of the business. All right, what do I mean by value of the business? What does Amazon do? What does Google do? All right, Google is a search engine. All right, when they are search engine, then what else? People want to rank their searches high. So what will they do? They will pay Google a sum of money. Likewise, Amazon, they do a whole bunch of stuff, right? Even though people know them by e-commerce, right? All your cloud items, they are stored in Amazon Web Service. That's how they earn money. And you realize that, hey, by asking all of these questions, you know what the company does. All right. In fact, one cool tip for you: if you open up your iPhone or your Android phone, right, go to your screen time, the top 3 applications that you use the most, probably you know how the business model works because you are a consumer of them and you pay money to them. All right. If you're not paying money to them, right, probably you are the product that they are selling. All right. Some pointers for you. Next, you know that, hey, you will detach yourself from market noise. For example, Amazon share price, Google share price crash, right? $2,000 to $1,000, right? You know that, hey, you will detach yourself from all of these market noises and you focus on, hey, when this share price drop, anything happen to the company's business fundamental? The answer is no, probably not, right? And this will present you good buying opportunity. And that is why at V, we have the 3R concept framework that we have been doing for more than 10 years. And the first thing that I want to introduce to you is right business model, right? The first R of the 3R concept. So what is right business model? Some of you might ask. Is that we want to invest within our circle of competence. What is circle of competence? Just not a cool tip that I gave you, right? You go to your application, go to your settings, the screen time. The top 3 applications that you use the most, probably they are within your circle of competence. Netflix, Disney+, YouTube, Facebook, Instagram. All of these applications that you consume day to day, probably you know how they make money. Netflix, subscription. Spotify, subscription, right? So all of this is a good check or sanity check on right business model. Are they gaining more and more users? Are your friends around you making use of their product and services? All right. This is a check for you whether the company is within your own circle of competence. Next, we look at the second R out of the 3R concept, which is on the rights management. What do I mean by rights management here? Is that, hey, over here from VApp, we can see that this company called Berkshire Hathaway, the co-founder, or rather not, I will rephrase myself, they're not really a co-founder, the one that make it popular, right? Warren Buffett and Charlie Munger. You can see that, hey, Warren Buffett himself actually has 16% of the shares of the company. Do you think he has the incentive or no incentive to drive the company better and better over the years? The answer to me, I think is a high yes, right? A very likelihood, right? High likelihood that he will want the company to do better, right? So that the share price will increase over time because his net worth is tied to the company. Can you see that? So we want to find management that are aligned with shareholders. You can check by doing the shareholding check, right? Just like VApp. Third R, or rather, lastly, we come into the last one. Actually, everyone like to focus on this last portion. In fact, I actually put it here because people want to focus it first. Is the price and valuation, or rather numbers. Over here, you can see that, hey, from this price to valuation chart in VApp, we can see that whether the company is under, fair, or overvalue. The green line and the purple line. So the purple line can be fluctuating day-to-day time over the past 10 years. All right. But a valuation for a good company run by good management, the intrinsic value, the green line, will be appreciating over time. And when the share price crash below the green line, you can see that, hey, that red color arrow that I've demarked for you is that mispricing. Opportunity for you to consider buying into the company. All right. So all in all, we have the 3R concept at V. Firstly, right business model. Whether do you know about their business? Are they making money? Secondly, management that are aligned with shareholders. Thirdly, we have the valuation versus price. You do not want to buy into something that is worth $1 and then you actually pay $2 for it. You're overpaying, right? But if the company is worth $1, you're paying 50 cents. Then you know that you're getting at a huge bargain. Now, let's do a very quick case study. Some of you might be scratching your head. Hey, what are you talking about? What 3R concepts? So let's apply them on this company called Meta Platforms. Right? Meta Platforms. I'm sure many of you know about them. In fact, the previous name is called Facebook. So what does Facebook do? They have Facebook itself, the application. They have Instagram, probably most of you here also have an Instagram account like me. And thirdly, they also have WhatsApp, right? WhatsApp region. Because in North America, most people use Facebook Messenger. But then in the rest of the world region, most of the people use WhatsApp, all right? So these three applications itself, you have Facebook, or rather what we know as Meta platform. So let's take a look whether you meet the 3R concept, right? This company, you know them well enough. So first question, do you even understand their business model? Right? Think about 2018, 2019, that region, right? When the senator actually summoned Mark Zuckerberg, right, the founder, to court, and they are scratching their head. They don't even know what the business, how they even make money, right? How Facebook, by not charging anyone money, makes money, right? So firstly, you know that, hey, Facebook itself, or rather the entire ecosystem, what they have users, right? So with users, they have a huge amount of data. So with this amount of data, do you think merchants, product and services, companies, do they want to sell to these users? The answer is a high yes, right? Because they want to pay Facebook a sum of money, right, to advertise their product to a huge volume, billions of people in this ecosystem. So a very quick check over here. Hey, probably over 90% confidence interval that you are confident, you know their business model, right? You are a user, right? Many of your friends and family members, probably they are a user, right? This is a touch point for advertisers to come in and pay money to Facebook, and they will actually advertise their product. So you actually know how Facebook make money now. Let's check on the second R at V, all right, which is on the management. Whether are they aligned with stakeholder, or rather shareholders. So this gentleman over here, I don't think I need to explain much further about him. His name is Mark Zuckerberg, the co-founder of Facebook back in 2004, right, back at Harvard University. So you can see at VApp, we have this company profile. Firstly is Mark Zuckerberg, co-founder and CEO. CEO, we have Sheryl Sandberg, right? And over on the right side, you can see that about the individual holdings. So Mark Zuckerberg and Sheryl Sandberg, do you think they will have the incentive or not to make the company more and more valuable? To me, the answer is yes. Why? Because most of their net worth are tied to the company. Billions of shares for Mark Zuckerberg, millions of shares for Sheryl Sandberg. And for them, this actually account for billions and millions of money, right, in their entire family's net worth. So I would say there's a high likelihood that the management is very aligned with shareholder. Moreover, this company is founder-led, right? You all know that founders for a company usually, most often than not, they treat the company like their baby, right? They want the company to deliver some sort of value to the world. That is why they are entrepreneur, right? So over here, I would say that, hey, management itself, they are very aligned with shareholder. Now, when should we take action? Some of you might ask. So I know about the business model, I know about the management. Now the question is the billion-dollar question. When should we take action? So some of you may say, I should have bought the company when they IPO in 2012, right? Back then they are below $100. If I buy the company, probably right now I'll make tons of money, right? I'll be financially free. Some of you might say that, hey, 2018 Cambridge Analytica scandal might be a good opportunity. Moreover, back then in 2018, we have the US-China trade war, right? Share price of Facebook actually dropped down to $137. So probably that's a better chance to buy it. And some of you might even say, I should have bought it during 2020 COVID-19 crash, right? The coronavirus struck us in March 2020. The whole world went into lockdown, like I've mentioned at the start of this video. So some of you that have taken action, congrats to you. But most of you, I'm sure that you have missed these three opportunities when the share price is under of their business value. So for all of listeners over here, till now, probably you understand what V is teaching you, right? The 3R concept, business model, management, and right valuation versus price. So for action takers, right, if you want to learn more about investing, when should you assess the company is under, fair, or overvalue, then I'll cordially invite you to our special webinar, a 2-hour webinar conducted by my mentor, Pauline, right? She will be teaching you three things, right? Firstly, why now is the best time to invest? Secondly, the 3R concept, she will go more in depth into different case studies. And thirdly, how to start with limited capitals, just like me. That's how I'm able to grow my money from 4,000 USD at 20 years old to over 100,000 in less than 3 years. With these results, of course, I did not achieve it myself because I have a community behind me. Along this investment journey, I bring my friend along, right, to join us in this community, investing community, because it's better to invest together than investing on your own. So scan this QR code right now, join us in the community, and get started by attending the 2 hours free webinar conducted by Pauline, my mentor. And we also do have a gift for you when you scan this QR code. So thank you everyone, and I hope to see you again in various events.